El foco en la industria de gestión de activos y vamos a saludar al estratega de divisas en Safra Sarasin Sustainable. Saludamos a Claudio Wewel, Foreign Exchange Strategic and Safra Sarasin Sustainable Asset Management. Hi Claudio, good morning.
Good morning, Antonio.
Well, U.S. economy continues to show resilience driven by investment in AI and a strong consumer demand. What are the main risks that could dampen this strength in the coming months? By the way, the Fed revised its growth forecast upward yesterday.
Yes, exactly. Yeah, I mean, what we see is that consumption has remained solid, primarily in the back of high-income households, which have benefited from the stock market in recent years. But on the other side, we also need to keep in mind that this very much diverges from the reality lower and middle income households are facing, where consumption spending has weakened and wages are not keeping pace with the costs. So at yesterday's rate decision, the Fed noted that there are downside risks to employment and that those rose in recent months. With the jobless rate that has been increasing as well, and it also noted that there could be downward revisions to the non-farm payrolls numbers. So there are downside risks, and I think it seems that the Fed has been weighting those a little bit more than the inflation risks and upward risks to growth. Maybe just one. Another thing you just mentioned, that the stellar gains of AI-related stocks are another element that warrants caution, as a sudden drop in the high valuations would significantly impact the economy, and that could easily result in a loss in household wealth. So this is clearly something that could also impact higher income households. And lastly, there's also pressure rising on the real estate, as many loans need to be refinanced at much higher interest rates. So it's probably not a systemic risk to the entire financial system, but we could see more local and regional bank failures ahead.
Claudio, what do you think of the Fed interest rates decision and Jerome Powell's speech? Will they be able to calm the markets? And the White House, too, with just one rate cut in 2026?
Yes, I mean, the recent dynamics in U.S. rate expectations largely reflects the news flow on Fed Chair Powell's succession, where Kevin Hassett has emerged as a front runner according to betting markets, and the market clearly expects a Hassett-led Fed to lean to the more dovish side. But in principle, I mean, the policy decisions should remain data dependent. So yeah, we don't really expect the Fed to cut their policy rate below neutral as long as U.S. growth remains robust. You just mentioned the upward revision to the growth forecast, and inflation is still a bit too high. So yeah, we only expect one further rate cut for 2026.
Expect the German fiscal spending to boost growth next year. Do you think this will be enough to offset the drag from tariffs, political uncertainty, and the strong euro?
Yeah, indeed. I mean, the German 500 billion euro stimulus package that is to be spent over 12 years, it's massive, and it should lift GDP growth in Germany by at least half a percentage point in our view. On top of this, you have positive real wage growth that should boost private consumption. And of course, you'll continue to see a negative impact of US tariffs on euro area exports. But there are also indications that the burden on the euro economy may ease somewhat. we've seen some later indications that there are more tariff exemptions on several products that the U.S. does not produce themselves. So that is a hope. And since you also mentioned the strong euro, which has been quite an important factor this year, since the euro actually was one of the currencies that appreciated most against the dollar since the beginning of the year. We do not think that euro strength will be the same level of a concern as this year, next year, since you'll probably see other currencies picking up against the dollar as well, and that could be primarily Asian currencies, which really haven't strengthened to the dollar and have remained quite weak so far.
So to continue to talk forex market, Swiss franc has strengthened recently, while the Swiss National Bank is reluctant to maintain negative interest rates. Claudio, how do you foresee the performance of the Euro Swiss franc and dollar Swiss pairs in this context?
Yes, well, I mean, I think it's important to keep in mind that the Swiss National Bank has effectively arrived at the end of its rate cutting cycle. I mean, they're going to have their press conference on the rate decision in a few minutes. But so far, S&B Chairman Schlegel has repeatedly highlighted that the hurdle for cutting into negative territory is very high, and this effectively means that the Swiss policy rate disadvantage versus the rest of the world is poised to fall further on balance. For the euro, for the European Central Bank, you kind of have a similar indications as of late, with Schnabel saying in an interview at the beginning of this week that the next step is probably also going to be a hike, though this is not going to be anytime soon. So as a result, we would expect the Swiss franc to be rather stable against the euro, while we'll probably see a continuation of Swiss franc strength versus the dollar in the coming year.
Finally, double question, Claudio. What do you expect in yield curves following this more dovish stance from the Fed? Will they flatten or steepen? And what performance do you expect from equity markets?
Yes, well, it's. I mean, I guess we're clearly in a situation where in fixed income we would only see limited room for lower yields over the next 6 to 12 months, and possibly, I mean, in the US they could even rise to some extent. So I think in fixed income it's clearly going to be mainly about carry. In the equity space, we do have a regional preference for euro area equities. We think we're going to have less headwinds from the currency side as we had this year, since the euro appreciation is probably going to be much more limited in comparison to what we've seen last year. We'll probably have quite some positive cyclical forces that will be reaccelerating on the back of the German fiscal stimulus. So I think that's quite a positive. And then I think Swiss equities is also something that could do well given its defensive sectoral mix. The valuations are still quite attractive. Swiss equities haven't moved that much this year, also due to a large portion that is basically in pharma, and for that the outlook has also improved quite a bit. From a sectoral perspective, we tend to prefer a defensive tilt. I think healthcare, staples, industrials are probably the sectors you'd want to be in the coming year.
Mm-hmm. Claudio Wewel, Foreign Exchange Strategy at Safra Sarasin Sustainable Asset Management. Thank you for coming to Negocios TV.
Thank you very much for having me.